My name is Mark DeVaul. I work with the London Company, and we manage the American Beacon, the London Company Income Equity Fund. The London Company is a boutique firm headquartered in Richmond, Virginia, about 25 employees today. And so really from the top of the organization down, we're encouraged to think like owners. The fund was launched in May of 2012, but this strategy has actually been around since the end of 1999. Our approach is really centered on downside protection and preventing loss of client capital. We really focus our time on the balance sheet because we think the market is much less efficient at assessing risk than reward. Looking at what management can do with the assets and liabilities under their control today to create value rather than speculating about the future. We're focused on dividend-paying stocks, really because if we look at long-term history, the last 80 years, dividends have provided over 50% of total return for the market, while also lowering volatility and providing a hedge against inflation. So we do think dividends over time will continue to be a very attractive investment class. To determine intrinsic value for each company, the London Company uses what we call balance sheet optimization. So the way this works is we're starting with companies with high returns on capital, trading at attractive valuations, generating significant cash flow. That cash flow often ends up on the balance sheet, and these companies are often under-leveraged. So we assume they can raise debt up to 4 times interest coverage, and interest coverage is operating profits over interest expense, and use the low-cost debt proceeds to buy back stock. You can reduce the company's weighted average cost of capital and reduce the shares outstanding. So that gives us the optimal capital structure, or what we call the optimized balance sheet. From there, we assume little to no growth in future earnings to come up with our estimate of intrinsic value. The benefit to the investor is it can give you greater downside protection and a margin of safety in each stock. It may sound counterintuitive to some investors, but we believe building a diversified portfolio of 30 to 40 stocks with meaningful, high-conviction weights with downside protection or that margin of safety built into each stock is a better way over time to generate strong results with less risk. So lower standard deviation, lower beta, lower downside capture. We bring to work every day that passion and commitment to our investors that we're going to focus on preserving their capital and over time generating outperformance versus the benchmark with less risk.